All right, ladies and gentlemen, I hope you had a wonderful day. I got another watch list for you, but we got to start off this video with a rumor. A lot of people in the chat today, they kept asking me about Carl Icahn, and I had no idea what they were talking about. I thought it was a very general question, and sure enough, I ended up seeing this on Twitter. There is a rumor going around that Carl Icahn has shorted the SPX. He shorted the futures. They're saying it's $50 million of premium. It correlates with everything with the CPI. It's getting pretty interesting, but this should make sense because today we finally chilled out. And why I'm saying it's such a big deal that we chilled out, well, here's your first pretty picture of the day. The S&P up until today, the last 12 of the last 13 trading days, they have ended green from open to close. What this means is that no matter what has happened pre-market, right when that bell rang, if you bought the open and held until the close, you would have made more money than buying the close and selling the open. So we talked about that a little too. If you're not familiar, that is the strategy that everybody was talking about up until right now. If you bought the close and sold the open from like 1993 till now, you would have made 817%. This little streak I'm telling you we're on now, if you buy the open, sell the close, you would have made 1.7%. So this was very rare. It's only happened like 4 or 5 times, and I think this streak goes back all the way to 1993. So today was a wild one. We finally chilled out, and people were responding to that hawkish messaging from the Fed. You got a Carl Icahn rumor going around right now. You had earnings after the bell. Disney was kind of in the middle, but they had found a way to go up. They said they're bringing back their dividend by the end of the year, not yet. And then they said they're going to do $5 billion of cost cutting and fire a bunch of people. And then it started going crazy. So today was wild. The bond market reacted. The market reacted. And actually, before I get into anything, I still think we are going to be in Chop City, but I just want you to notice this. Take a look at the bonds and tell me it doesn't look like the stock market, but this one is in fast forward. Pretty much, I think we're right here. So I don't care what Carl Icahn's doing. I don't care about anything. I do know CPI on Tuesday is going to be very important, but the way I'm looking at it, I think we got a little dip in us. I think we're going to make one more pop towards the highs, and then depending on CPI, either bonds will come up, and then that means we go up, or we follow the bonds and come down on bad CPI. So hopefully you enjoyed that. It's going to be wild. We have a lot to talk about. I did make a bunch of plays. I'm kind of glad a little bit that I closed that ES now, so we're going to see. But Chad, I hope you are locked in. I hope you're ready to go and run it, baby.
Working to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Feel how I feel, then you feel like it's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
But right off the bat, whether you are bullish or bearish, remember, we got love for all of y'all. Drop a thumbs up on that video and help out the channel. And remember, we post these updates every single night. But if you were watching yesterday, we talked about it. Today, the Bears got a breather, but it's still looking like we are going to be in Chop City up until next week. So what I'm looking for the next couple of days, if we don't break out to the highs or break down and start setting more lows, it's starting to look like we are going to bounce around and get ready for CPI. So some people might like this, some people won't, but the point is you should not be too unfamiliar to this. And what I'm talking about, we've done this a couple of times. So now we're getting closer to the event. You might be able to hold up. This is really what categorized all of November and December. Then you had CPI, then you had the Fed, but any of these other bounces, even on the most hated rally, it was all around waiting for Powell, waiting for CPI. Same thing there in June as well, and borderline what you had in March. Again, a lot of it was either Fed or CPI. So it looks like we're getting ready. I still think the market can move a little bit, but definitely after yesterday, I gave you those quotes on the watch list, but this morning, a lot of people were kind of being shifty with it. So keep that in mind. But now to understand what happened today, there was a bunch of Fed speakers, and they seemed a lot more hawkish today, but the overall message was the same. So I said this before even Powell, and we were saying how much more hawkish can Powell truly get? Like, what new words can he say that we haven't already heard before? So all the Fed members, they pretty much said the same exact thing. We got more work to do. We're going to keep rates high. We are not going to cut this year. The only difference I saw was that 2 of the Fed members, they did bring up tightening financial conditions, or they mentioned financial conditions, which Powell has kind of been shying away from. So you had a little bit of a reaction to that, but the way I'm looking at it, maybe the fact that we didn't buy the open and go crazy, and then all the Fed speakers started talking, people were a little bit nervous, and they just reacted more to the same message than they have any other day. So that's why I'm saying watch out for all the events next week, and we might get a little bit of this, but I don't think direction has been confirmed. Well, realistically, I still think we are pointing up. The uptrend is holding, but now that's why I'm expecting we chop a little bit until we get into the main event. So that is key number 2, but a little bit more insight on why people were a little bit more sensitive today. You had used car prices, the Manheim used car price index. It came in and it actually ticked up after dropping for the last couple of months. That made people a little bit more nervous for the CPI. And then Google, they had a AI problem that led to a sell-off. They had that presentation with their AI Bard, and it answered a question incorrectly, and the stock market ended up selling, or at least Google sold off 8% after leading. So remember, we saw Amazon, they were doing good. Well, now Google's kind of suffering the same fate. So all of this kind of contributed to the downside, and this is something I want you to understand here with the last couple of days or weeks. We've been dealing with a lot of no news is good news. Besides Powell, besides CPI, and even the jobless claims, some of the macro we've been able to kind of brush off there as everybody was pricing in the bullish aspects, but we haven't really heard any too bad of news. Even any of the earnings that didn't do good, they were not as bad as feared. So that Google news today and the reaction, it kind of shows you what the market feels like when we're reacting to other stuff. So that's where we got a little bit of extra downside, and it was kind of hard to brush off. So we're going to see how it is the next couple of days. Remember, you're not going to be getting too much data. I think you even had wholesale data today. It didn't do anything. You will be getting jobless claims in the morning, but here's what you got to ask yourself. What is going to be more surprising than that huge jobs report that you got last week? And, well, you saw that reaction as well. So be on the lookout. Maybe people are going to be sensitive, and then Friday, you're going to get current conditions, University of Michigan, consumer sentiment, and everything. And somehow it says revisions for the CPI are posted as well on the calendar. So we will see what happens with that. But let us get into the plays. So right off the bat, I made a lot of plays today. We're going to go over them, and I pretty much am holding everything else that you've seen over the last couple of days, but I'm going to start with the first 2 plays that I made today, BABA and NetEase. These are China stocks, and they announced today that they're getting into AI. So you saw what happened with Baidu. Now BABA said they're working on an AI like ChatGPT. You even heard from NetEase as well, one of their partners or their subsidiary. It even went up 20%. They announced that as well. I said, hey, I like these a lot, and the main reason is these China stocks, they led coming into the beginning of the year, but after we started rallying on the second half, what you'll notice on some of them, especially BABA, it's not near the highs. It's literally 20% off of those highs earlier. So I said, hey, if I'm still holding that short, I want upside. I like the AI hype, and relatively speaking, it is not at its highs. So if you look at NetEase, though, they are definitely a little bit more higher, but I don't think they have the same type of run up there as BABA, and BABA is the most important. So both of them, they're both related to AI. I thought that would be a good pickup. I started with 50 shares in the morning on both of them, and that was even pre-market. I think you could see it. Like, I bought them early. Like, I bought them before I took a dump in the morning, and then it opened out through the day. They kept dropping. There was that big sell-off. I averaged down on both of them. Have a pretty decent average. I ended up losing only like $1 per share based on the average, and that was a pretty messy day. So I was very, very happy about that. But that is play number 1. Then play number 2. I don't have plays on it. I kind of wish I didn't, back out of it earlier. But Disney, they had earnings, and like I said, it wasn't the best. They missed on Disney Plus subscribers. They beat on park revenue, and then everything else was in line. But I think they did miss on EPS. But the Bob Iger return, they said they're bringing back the dividend at the end of full year 23. So we talked about this a little bit in speculation, and I'm glad it got confirmed here. But they said towards the end of the year, will I be buying it for dividends? eventually, but I'm not going to play in right now, especially after how much it's been moving. But towards the end of the year or the final quarter, we may get that news. But that was good. And then there was also the reaction there with the jobless cuts or the job cuts that they announced. That was the biggest pop. They said they're firing like 5,500 people and are looking to save like 5.5 billion. And then just overall, people were expecting a lot worse. Again, it wasn't as bad as reacting or bad as feared, and that's what led to this reaction. So I think it'll be a good one to watch tomorrow. Going to be keeping my eyes on them. That is play number 2. And then finally, CRM. This one was wild and very, very weird, but they've had a lot of activist news. They've ran up a ton. Remember, CRM was one of those underperformers the last couple of days or the last couple of year. I'm going to show you when we get to the chart, but they announced after the bell and even during the day, Third Point, Dan Loeb, they're taking a stake in the company, and then they also talked about their own AI throughout the day. So what I want to show you with CRM, it's made a pretty massive move, and this was like a Facebook-esque drop more or less. You know, big tech company, sold off heavy, people left the company, people were worried, they made a big acquisition with Slack, people didn't like all of it, and then now all the activists, they came in really to start the year, and it's moved up a lot, you know, 120 to 170 in a couple of weeks there. That's pretty big, so that's the only thing that I didn't like about it, but here's the funny part. Take a look. This was the pop here today on the Dan Loeb news, and then it came down, and then they started talking about the AI stuff. Then the Dan Loeb news hit after hours, and it popped after hours. I know, right? So keep your eyes out for that one. I think it's going to be an interesting one, but we saw it. I did not make a play, but I'm only worried about how high it is. We flipped CRM a couple times already, even at the beginning of the year, so going to be a little cautious with it, but that is play number 3 in all of the plays, and now getting into what I did today, like I said, I started with Baba and NetEase in the morning. I grabbed Uber at the open. They actually killed it on earnings. Very surprising considering they're like a growth stock and they burn a lot of money, but the report was actually pretty impressive, so I liked it. It was up 7%. It came down to 5%. I grabbed 200 shares at 36.70. Then it kept dropping, and then I averaged down with another 100 shares. That was during Baba, NetEase, and Uber at like 35.31. Now my average is like 36.25 on 300 shares, and really, I'm just looking for the breakout there. Again, if it gets above $38, that's where I said like that's the minimum I want to sell out at, but pretty much if you could get above $38, it's a pretty big breakout point. That's where they kind of sold off at the beginning of 2022, and it does leave room for a lot of upside, especially here last time. It went crazy, and I think, where was it? Was that longer than 2 years ago? Right here. If they get a good earnings and run, there's usually a lot of follow-through. So we'll see what happens, but the volume on the day was very, very big. We're loving it for the long term, but I think that'll be a good flip. And again, it outperformed when everything sold off, so I was really, really happy about that one. But that was all I did. I'm still holding everything else now. Again, pretty much same as yesterday. We got to make the money I thought I was going to lose extra on the NQ. I was ready to fight today, and that came back. The bonds came back a little bit there, so that was good. Again, here's the Uber, only up like 50 cents or like 30 cents a share since we have 300 shares. And then another play I would be watching for LMT. I'm down on it with 50 shares. Remember, I bought this before the new year, and then they had earnings, and then they sold off. But there's been a little bit of that escalation news, and I'm really liking LMT. And again, they were able to go green today. If we do start to turn down, that's part of that defensive positioning. So I ended up liking that one. And then Sound, remember, I bought these 200 shares. It's actually up like 17 to 20%. So the AI stocks, they cooled off yesterday, or the lower cap ones, and this was able to run, so I like that one. And then the Amazon shares, remember I was up on it. I'm still up $72. We got a good average, but I lost that $500 of profit. And then speaking of loss, Enphase, bro, 25 shares cost me more than my 50 shares on the flip. They had really good earnings and sold off. It was like a 14% top to bottom. It was absolutely wild. So riding it out for a little bit, I thought the earnings were good, and even most commentary was good on it. So let's just see if it kind of has one of those sell-off reactions. Some people are a little bit concerned about future guidance, so going to be watching out for that. And then, like we said, hold the China plays, and then Bank of America. I think we're still up on that one. Oh, no, it flipped there towards the end of the day. But if you were watching, you know, the bank stocks have been doing good. So Citi's still up. And if you've just been watching since we've been talking about those bank stocks, it's kind of performing how we expected there. So I plan to hold those for a little bit longer, and I'm liking it despite the premium that they are holding. But that is everything. Tomorrow should be wild and get us into the final days of the week. The CPI is lurking. The emotions are up, and everybody's still going back and forth even though we're at the highs. And well, just welcome to the beginning of the year, and I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining, and I need you to remember the parable of maybe. Don't judge anything too soon. Anything could happen. If it looks good today, maybe it ends up bad. If it looks bad today, maybe it ends up good. And don't forget too, if you're not bearing fruit, don't be afraid to let it go. And I'm not telling you stop loss, okay? No. I'm saying the bigger things, and stay focused, keep planning, water the tree, and get ready to grow, baby. That's all I got to tell you. But Chad, I love you. I will see you in the morning, and you better be hydrated. And just shout out to everybody holding it down and keeping it positive. We love y'all. And Biden says he does not think there will be a U.S. recession in 2023 and 2024. Horn.